think that's the shortcoming of like the, current state of the Rollup centric roadmap, where they're saying like, no, you need to be like a based Rollup. Then you can get like even stronger sort of like, interop with other based rollups because you are like, aware of L1 state. And that doesn't necessarily sound like what these folks want to do at all.
Hey everyone, this episode is brought to you by Namada, the shielded asset hub rewarding you to protect the multi-chain. So not only can you protect your own data across any asset and any chain, but you also get shielding rewards for strengthening data privacy protections for everyone. So you can check them out at namada.net and follow their mainnet launch. Stick around, you're going to be hearing all about them later in the program.
All right, everyone, welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer, the views expressed by my co-host today are their personal views and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone, welcome back to another Roundup edition of Bell Curve. You got me and Myles on this one. Myles, how you doing, buddy? How's the week?
Good. It's good to be back. End of summer. I'm looking forward to sweatshirt weather, football coming back. All those
same, dude. Well, not the football, but sweatshirt weather.
I know. Yeah, like it's all happening though.
Yeah.
But yeah,
I've got the Martha's Vineyard sweatshirt on here. You're broadcasting from Nantucket. This is a 10 out of 10 waspy. Yeah, not great looks.
Didn't need that disclosure. Thank you though.
Oh, dude. All right, so we got this week. It was a little bit of a slow news week. There are some political stories. I'm sick of talking about politics stuff within the realm of crypto. It feels like the big debate that everyone wants to have right now is around this L1 value accrual. We've talked about it on past episodes of Bell Curve, but I feel like Max Resnick has really been, we'll use him as a jumping off point because he's been on this Make L1 Great Again little grand tour. He was on Bankless this week, and it sparked what I think is a lot of pretty healthy, at least very intellectually interesting debate that's going on in crypto. But before we get into that deep subject matter, I had a couple. We had a little just bit of a funny week for the culture of crypto, I would say. One of the things that I did not have on my 2024 bingo card is Iggy Azalea and Eric Wall. Basically, there's like schoolyard flirting going on here. There's let me see if I can pull up this Twitter of Iggy tweeting out like little pictures of Eric. They're going back and forth. It's really something, dude. Is this making it, do you think, or is this just
no? This reminds me of the bear market, honestly, where we end up getting like bored and coming up with random things to be doing, random ways to entertain ourselves, and then getting back into semantics debates on the super nerdy side. That's my sense. It's like we've hit a lull here where like, price action alone and new projects launching is not enough to like keep us all entertained. And this is what we devolve into, every so often, but that's okay. We could use a break.
So I just had to scroll to find this, and I went and scrolled through Iggy Azalea's tweets, on a one-day time rise. First of all, just look at this. This is absolutely ridiculous.
This is the first time I'm seeing this, by the way.
Yeah. Honestly, I got to give Iggy some credit. Her meme game is pretty strong. Like, pretty strong meme game for a mainstream media celebrity. And I will say, in terms of the not financial advice, I have no idea what makes meme coins go up or down. But she is working harder for her meme coin bag holders than just about any other, dev or creator out there. So
yeah,
you got to give her credit. Yeah,
doing a lot more than the the NFT projects did for their JPEGs. Similar playbook, but I think
I also unironically kind of think this is the playbook that you'd want to run as a meme coin creator. I think Bonk went down this road of we're creating utility for the meme coins. Like, get that out of here. That's not why we're here. We're here for the memes and the pictures. And I kind of do think that, I don't know, she's onto something here. She might.
It's like a weird crossover from those old like social token ideas, right?
Yeah.
Where you like really put your personality and identity behind a token, but just a little bit more memey. It's like the hybrid between NFTs and the social tokens is whatever this brand of meme coin is. But hey, all for it. Let them
Yep.
have their fun.
Yeah.
Why not?
We love it. It's
Yep.
it's honestly I waffle on the day, but sometimes I prefer this sort of entertainment to the endless semantic debates that we indulge ourselves with on Twitter every now and again. Those
Yeah. Or just lack of weirdness in general. Like I spent 6.5 years at Fidelity. There weren't a lot of memes flying around that to keep us entertained on a day-to-day basis. It was a bit more buttoned up, and I don't miss that. I'm fine with having some weirdness in my life.
Dude, I'm so on that page. So I saw there was someone tweeted out a couple of photos from one of the events, I think Token, that's happening this week, and it's like, this is why no one takes our industry seriously. I don't know. On the one hand, I understand that crypto makes me cringe a lot of the time. There's definitely a lot of behavior on Twitter and out in the general crypto sphere that I do not endorse. But what's with the hurry to become like corporate and grown up here? I mean, part of the fun part of this industry is that it's young and vibrant and alive, and it's on the edge, and it's a little weird sometimes.
Yeah.
Like, the grown up corporate stuff it's cringe in its own very specific way too. Like, what's the rush to get there? I don't know.
I think there's like you can debate like in a local context, like, hey, do I want like my founder, like doing XYZ, and like what does that do for like our brand? But then like if you're not like directly associated with any of like the whatever weirdness in question, it's like, would you rather have again, like, would you rather have this or like boring corporate culture? Like, no, like this is not what's impeding adoption. Like, there's bigger fish to fry on that point. But I think it's good. We get the youngs, the youths with this sort of
The youngs, yeah, skibbity. Skibbity
oh
Riz.
man. Exactly.
And to your point, I don't think it's, you'd probably have thoughts if you saw your founder or something like that just lying passed out on the street of South Korea. I'd have some questions. If I was an investor, I'd have some questions. Yeah. Like, what's going on here? Friendo. Yeah. All right. So last small, just sort of funny, I just want to get your take on this because I find it kind of an interesting debate. So Near had pulled a little bit of a marketing campaign this week. So initially it appeared that their account had been hacked because they changed the profile picture. They were tweeting all this weird stuff and it just looked like a pretty garden variety account hack. But then they posted this video, which was basically an explicit callback to Max Headroom. Max Headroom, by the way, I'd heard of that about a month ago or something, but it was this, basically this broadcast back in the 80s or 90s got interrupted. Some random guys with like a mask on their face. They called themselves this character, Max Headroom, interrupted. It became this sort of cultural phenomenon. And I think it actually got like a show or something like that. But anyway, it was in that style, and it ended up being a little bit of an advertisement for, this event that they're doing over in either Singapore or I can't remember where, in one of these places. And it was an interesting debate, right? Because on the one hand, I appreciate people taking big swings, but it definitely came off as a little cringe. And I think there were some pretty legitimate concerns around safety. You don't want to be normalizing account hacks and baking it into a marketing campaign. I'm kind of sympathetic to that point of view. On the other hand, everybody's talking about it. It definitely it did what a marketing campaign is supposed to do, and here we are on this podcast talking about it. I'm interested in what your opinion is. So at the end of the day, that's what they're supposed to do.
Does anybody come out and said, "Oh, this was a good idea"? Like, I can't really come up with a rational argument for why it is a good idea. Yeah, going back to what we were just talking about, it plays into the general sort of weirdness. But like, if I was a Near employee, would I be like psyched about this idea? No. Oh my God. It like gets people talking about it, but then it also gets people reminded of like why Near might be searching for some relevance at the moment, right? It's like, how desperate are you guys if this is what we're doing these days? So I think there's probably a lot of low-hanging fruit in terms of like marketing campaign improvements within Web3 broadly. I would not call this like a step in the right direction. Was it weird, and does it was it a very boring week? That this at least gave us something to like to talk about. Yeah, but again, like locally, when I want that, like no, I would.
So I'll take the other side of this and just say, when the effort that it requires to get people to care about your thing is immense. And people always tend to think about the best case scenarios. Like I produce something out into the world, some product launch, whatever I want eyeballs on, and everyone thinks it's cool and everyone knows about it. Few and far between, right? Like the second best thing you can do, I think, is what Near did here, which is at least everyone's talking about it. It succeeded in getting eyeballs. I think the worst thing that you could do is a marketing pitch or campaign or proposal that feels right, but like no one gives a stuff that no one cares about. And if people hate
Yeah,
it, at least it's still a strong emotion. And also, they're taking a swing. I don't know. They're taking I kind of respect people that take bold risks like this. You got to imagine, Ilya was part of the video. I have to imagine he was a little bit nervous about that personally.
yeah,
So I respect it. I respect it.
yeah. I'm with you. Maybe it's also just like a little bit of bias because Near has done so many different things. They're like the AI chain, then they're like a DA layer. They're I forget, fast finality layer or like something like that. And it's like,
Yeah.
what are you guys trying to be? What are you trying to be? And then I didn't really learn anything about Near other than they have a more aggressive marketing strategy, I guess now. But hey, here we are talking about it.
Here we are talking about it, baby. All press
That's
is good press. I don't know.
yeah. I guess so. I'll give them
All right.
that.
I can tell I've convinced you here. All right, with my victory in this argument, let's
Totally,
move on.
totally.
Let's move on to the important part of this here. Now that we've covered the big stories, I want to get your take on this L1 value accrual debate, and maybe I'll just start high level and editorialize here a little bit and say this is something that the sort of anon group, or the unaligned anons, have been pushing on for a little while, which is, hey, maybe the Rollup centric roadmap was not the right move for Ethereum at the current moment, or there are at least some serious drawbacks to it. And then I think Max Resnick, who I would characterize as sort of the doxed face of the unaligned movement, has gone on Bankless and basically just described. He did a really good podcast actually on the Guart podcast a month or two ago, where he outlined what in his views were the mistakes. And I think the way that he views it is, I'm paraphrasing here, but Ethereum used to have all of these users, which it generated fees on in some way, shape, or form. And then there's this new layer that got spun up, the L2s. And in a sense, Ethereum has churned a lot of the users that were generating revenue for it. And then we probably made an additional mistake with 4844 where we mispriced the rent that these L2 actors should be paying to the network. And as a result, what we've seen essentially is a drastic decrease in revenue and a drastic increase in churn of users from ETH-DL1. And this is where people start to talk past each other a little bit. And I want to use this as an opportunity to align on some shared sets of definitions and what the actual interesting questions are that we should be asking, because, that's from that lens, it looks very negative. But then also proponents of, there's another group that says, well, look, this was explicitly the plan, right? I don't know why everyone's so surprised about this. This was the Rollup centric roadmap. It's been out. It's been public. We explicitly wanted, and the goal was to push users up to this L2 layer. So this is working as intended. And so I want to get a sense, Myles, from what do you think at a high level of these arguments? And then maybe we can zoom in on some of the areas where I think people are talking past each other.
Yeah, so I think I'll start at like the absolute highest level, kind of work down from there. I think blockchains, L1s in general, are like open source platforms with monetization baked into usage, right? That's like the main difference between, or one of many differences, but as it relates to monetization, the difference between like a pure OS platform and a blockchain is that you have to actually pay to use it, right? And so I like my general philosophy on long-term value maximization is to basically think about how to maximize usage, right? And what does usage mean? It means like adoption from devs and retention of those developers. And the success of those developers, bring the end users that drive usage, right, of the platform. And, I think the L1's job is like, first of all, I think they should be optimizing. That's what like they should be optimizing for, right? And then what do they really provide that drives adoption and drives retention? It's okay. They provide really strong network effects, right, for for the apps on the platform, and that primarily, or at least initially, starts through shared state or shared settlement, right? And they also provide, all of the table stakes sort of like features around security, censorship resistance, et cetera, et cetera. Um, and so I think the sort of question here is, did Ethereum optimize for usage long term with this roadmap, or did they make a mistake, right, in terms of like pushing people out of L1? And frankly, like the L1 story, the apps of story of apps on L1 has not been like great, right? Like you're super constrained in terms of the amount of logic you can put into these apps, and that's not just Ethereum. That's really any sort of generalized smart contract platform. There's very little control, right, on the L1 directly. There's value leakage and sometimes actually like exploitation, right, of the end users. At the same time, there's a lot. So that's like, okay, that's where Ethereum was. They said, okay, we want to keep the L1, basically as is, because we believe it provides like those security benefits, and we think it can provide network effects around shared settlement, but we think it's in the incentives of developers, right, to move to more performant layers, number one, and maximize like more control, right, over their execution environments. And so the general thinking is like, yes, of course, like L1 was printing for a long time, but was that, sustainable, right? And maybe did they optimize for value capture too early at the L1 level? Like that's a kind of a separate conversation. And so if you're, on the Ethereum side, like to defend them, they are basically optimizing for like longer term, you know, usage, right? Maximizing longer term usage, and they're saying like, this is where the puck is going anyways. We can provide the same level of like security benefits. The L1 doesn't have to change to provide that, like to L2s, and they can pursue this horizontal scaling, right? That we think is like the end game for any sort of platform that wants to support huge amounts of activity. And the questions are like where I point to, like looking back in hindsight is, around whether or not they actually, rollups were kind of like constructed in a way where Ethereum can provide those like really sticky features, which is really around like shared settlement, right? And so that would come in the form of like trustless, interop between these different like higher layers, right? And they haven't so far. Like we've seen these L2s are kind of like siloed, right? Because it becomes at a certain point in time, it becomes not an adoption question, but more of a retention question. Once an L2 gets big enough, what are the incentives to stay, an L2 versus becoming their own L1? And I still think that there's like a lot of really strong arguments for why that won't happen necessarily. Like,
Yeah, me
I
too.
think just from an economic standpoint, it is like more attractive to be an L2. You don't need to pay a huge validator set. Maybe you could just pay like, you can take shortcuts as it relates to security. Like that's the whole reason you're an L2, and security is a big cost. But and then on the Solana side, they have, they're hyper optimizing to keep as much as possible within one shared state, right? Like that is, they're all on the same page of that's what they want. And I would argue that that is somewhat at odds with the more like long-term story of retention for the most successful apps. And right now they're like starting, to see like the beginnings of that tension that's going to exist. So yeah, there's a lot to say about it, but I'll pause there.
Hey everyone, this episode is brought to you by Namada, the shielded asset hub protecting the future of the multi-chain. Namada is a chain that's near and dear to my heart because in previous seasons of Bell Curve, we've talked about how the cardinal original sin of most blockchains is not thinking about privacy from the beginning, but also because if we want to onboard a whole bunch of applications, it doesn't work in a default transparency setting. So Namada not only brings about a better future that we all want, but it's going to help onboard a ton of new applications. So Namada introduces a novel shielding reward system. The way that it works is if you hold your assets in the shielded set, you help strengthen Namada's data protection guarantees and collect rewards in return. Namada will initially support IBC and Ethereum-based assets, but eventually the idea is for this to expand into a comprehensive hub for all assets. Really, really excited about what the folks over at Namada are doing. I highly recommend that you go and check them out at namada.net. You can follow their mainnet launch, which is soon TM. Very exciting. Tell them that I sent you. Click the link, bottom of the show notes. Okay, so what I wanted to start doing is focusing in on some of these arguments that I see people having around Twitter, knitting that into some of what you were just saying there thematically. Here is an argument that I hear a lot, and you're probably sick of hearing as well, which is, are L2s extensions of Ethereum? Because right there, when you laid out that information, this is where you start to lose people. And with the Solana camp, because they've got this laser focus on this North Star of, shared one single layer of shared state, they say, hey, this is parasitic because you're siphoning off activity and execution fees and all that type of stuff, and it's parasitic. And what the ETH camp tends to say is, no, this is actually this is actually extension. We're extending Ethereum's network here, and this is going to be beneficial for Ethereum. And I think that framing it like that, are they extensions of Ethereum? I dislike that framing because it automatically devolves into a semantics debate around what does it mean to be an extension of Ethereum. And I know that people in crypto are allergic, sometimes for good reason, about talking about things like token price and things like that. But I think what people are really asking here is the Rollup centric roadmap bullish for ETH, the asset? I think that's what people are asking here. And I think that you could construct a steelman for both sides of the argument. And the steelman for why L2s are good for ETH, the asset, would essentially be we are freeing a lot of the constraints that previous apps have had. And what we're also doing is we're exporting and expanding the market for ETH, the asset. And so I think what the bull case would be here is that there was a lot of like dead weight around like fees being too high, the environment being extremely restrictive in terms of what apps can do. So we're expanding the market to such a degree that we're going to expand the liquidity network effects of ETH, the asset, and that is going to outweigh the reduction in fees and revenue that ETH main chain generates. Now, there are some people that say there's going to be such an unlock in demand. I get just also to throw in here, I don't. It's going to be a long time, I think, before this happens. But there are also some people who say that the net increase in settlement fees paid by L2s to ETH main chain is going to exceed what Ethereum fees used to be. So it should be bullish for ETH revenue. I'll pull up some statistics here in a second, but we're pretty far off from that. So there would have to be an enormous increase in activity on L2s, but that's still part of the bull case argument. The bear case argument, I think, for this is that you can essentially almost have unlimited activity happening at the L2 layer, but that doesn't necessarily mean that value is going to flow back to the L1 token. And I would describe this actually, and I hear a lot of economists actually make these arguments. Here's the analogy that I'd give you. These arguments that you hear about free trade and specialization, and these, I think, in somewhat, some of these economists are at risk of being a little bit condescending, but it's like, hey, when country X specializes for something and country Y specializes for something, you create a 1 + 1 = 5 situation, and there's an economic surplus that's created. And that's true, but that doesn't necessarily mean that the economic surplus is shared equally between the two specialized parties. There are different value accruals at different places in the value chain. And so I think what, if I was like very against this idea of, or if I was trying to poke holes in the L2 roadmap theory, I think you obviously have to say that yes, you are expanding the pie, the amount of block space in the environment and apps that are getting, like, the economic activity that's happening here. But also now you have multiple different assets that value has to accrue to. So previously, where execution, settlement, DA, consensus all happened on one layer, now execution is happening in another layer, and there are a bunch of tokens that are essentially the equity instruments of those cash flows. And so, it's not really realistic to just say, like, those have to be included in the entire sum of the network, right? And so what the bear case would be is that, hey, you actually picked the commoditized part of the layer, which doesn't command any fees and in the long run won't be super valuable. So do you agree with that as a reframing of this L2's extension debate? And which side do you sit on there?
I I'm not sure it's actually like the correct way to like attack the problem. And I would just flip it on its head. And in general, I think like you always want to, if you're thinking about like the long-term success of your platform, you start with the perspective of the developers rather than starting with the perspective of the L1 and being like, is the L1 parasitic? Are these L2s parasitic to the L1? Like that's, I think, the wrong question to ask. I think it's more, in what ways is the L1 parasitic to the developers on the L1, right? Like I would say the L1 is like the dynamics of Ethereum L1 in some way are more parasitic to dApps on the L1 than L2s are to Ethereum. If you're a dApp on Ethereum L1, I mean, some of this extends to Solana, some of it doesn't, but like you are basically saying like, okay, your users are going to have like the majority of the fees your users pay to interact with your dApp are not going to go to the dApp, right? They go to the L1. Any sort of value, like, MEV or like, valuable transactions that are generated by your application, again, that's not going to the dApps for the most part. It's going to the L1. And you can make the same argument to a much lesser extent on Solana, right? Like Solana has done everything possible to make this just the best, platform to build smart contract apps. The fees are negligible, right? They've even like, culturally, like they're much more aligned with the developers, like as it relates to MEV, right? Like Jito shut off basically the client that was doing sandwiching for a while to protect users. And they're still running into this like, oh, well, devs want more control, they want more value capture, et cetera, et cetera. And so they're, building these network extensions, right? That's the way that I think about this is like, it doesn't matter what the L1 wants. What matters is what the devs want and what you think devs are going to want longer term. And frankly, like the value of L1 tokens has never been a value capture story. Like there was a minute there where like people were doing DCFs of Ethereum and being like, wow, this is amazing. But it's always been a growth story. It still should be a growth story right now. And so optimizing for like what you think, accrues or captures value to the L1 today. Like, of course, yeah, if you could have all of the applications on one state and all the developers were thrilled and wanted to stay, like, then yeah, there's no reason to pursue an L2, based roadmap, right? There's no reason to make that easy for developers, but that's just not the case. It's like that's where I just think the framing of this whole conversation is wrong. Is it's not accepting, like, it's not starting with what developers want, which I think, at different points of the life cycle is different. Like in the beginning, I think developers, a new project gets more benefits from the ability to deploy a smart contract app on an L1 with lots of liquidity and users, and security taken care of and interop taken care of, right? Like the benefits of that are stronger than the downsides of lack of control, value leakage, et cetera, et cetera. But at a certain point, at in a project's life cycle, like it starts to change, right? Like I would argue at this point, Uniswap is not psyched about like, the amount of value that they create and the amount that they actually keep like not even just the token holders, like the LPs, right? Were
Mhm.
getting crushed. And so, yeah, I think sure you could look at, you could say like, yeah, it's all parasitic to the L1, but it's more, I think, like accepting reality and like re-optimizing for long-term adoption. And that's not to say that like Solana, like you can get to a very, very large successful place by just optimizing one, shared state for one platform that share state and like tries to keep as much activity as possible on the platform. But I do think it's like, if you're Solana, you do need to accept the reality that like, yeah, this is not going to be the best place to launch everything. This is not going to be the best place to necessarily like keep your application once it gets to a certain size, in all cases, right?
So working in reverse order here, just addressing those points, I agree that this is coming for Solana. So I haven't really read into the nuance of network extensions and why they may or may not be different from L2s, but Solana, this is actually a tension. I don't know if you remember this back when we did the app chain thesis Cosmos season together. Sunny Agrawal of Osmosis brought this up and said, it's a little bit of an oxymoron to do a permissionless app chain because, if it's permissionless, by definition, people can build anything they want. And then how can you make sure that it's only for this one specific app or use case, right? And there's an inherent tension there. And I think the reality is that Solana is a permissionless network. You can build, within the limitations of what that protocol can do, basically whatever you want on it. And there'd be no way for, the Solana Foundation or Anatoly or whoever to stop that from happening. And so and I think you're starting to see that now. And I think this is manifested early on as an Ethereum problem, but I think is coming for all layer ones eventually if you don't sort of build for that. But here's where I also want to poke at this idea of just do the thing that's best for the devs. On on one sense, I agree with you; these are your customers, but I think that there is also a very realistic version of this where you serve your developers and they build things, but you don't end up capturing the value that they build. And I think that's what Ethereum and L1s in general are at risk of here. And frankly, this is like the long history of open source software where you create a bunch of value, but because it's open source and it's decentralized, you don't have a great way of capturing that value. And when I think and look back on what has Ethereum done extremely well is I think that there's this funny catch 22 in between, how much do you want to monetize the apps that are building on your developer platform? Because the catch 22 being Ethereum does its best when the token is going up, because I think you could basically look at ETH, the market cap of ETH as your total addressable market as an app developer, right? That's why it's so attractive to build on ETH and L2s, because there's $300 billion worth of crypto native wealth for you to attack. And so there's this weird irony here, or catch 22, where now people are saying, well, you captured too much wealth and that has to flow back to the apps. But then that could be not beneficial for ETH, the token. And so this like positive reflexive cycle that kicks in around creating more TAM for apps to attack actually goes down. And so, I actually pulled up this tweet here from pseudo Theos. He just joined Symbiotic, but he used to be at Scroll. And he tweeted, high fees are bearish, low fees are bearish, question mark. And I sympathize with this, but the irony is that he is correct. Too high of fees are bearish and too low of fees are bearish. I think what you ultimately want, and it's very difficult to actually quantify this, but what you want to do is you want to charge the most amount of fees that you can without actually shuttering or losing out on demand. We did a whole season on dexes with Dan Robinson, and there's a very specific term for this, but there's some kind of equilibrium curve that you could imagine where when the fees are too high, you're actually losing out on on profit, right, for the AMM itself. But at some point, you actually lower the fees to the point where, yeah, you're probably actually better off just gouging people and sacrificing some demand, because the net amount of aggregate fees that are getting paid to you are higher. And what you're trying to do is find that tricky optimum, right? And it doesn't make for great Twitter or great nuance. And it's like, hey, what's good here? High fees, low fees, I can't win. But the answer is somewhere in the middle. You should be maximizing the net aggregate amount of profit. So
Sure. Yeah, I don't know. I feel like yes, but we probably wouldn't be having this like existential conversation around Ethereum if Ethereum had, like, let's say the value capture story was like not is like the same or lower, like
Right.
meaning like they're not capturing as much value, but like the adoption story was going through the roof, right? If there was just hordes of developers like coming onto Ethereum, migrating from Web 2 to Web 3, like Ethereum token would be going up. It's not like, regardless of if there was a pure like, like a really like great fee, value capture story associated with it. And that's kind of the point I'll just keep hammering home right now is like, yeah, I agree with you that the base token being like, price appreciation of the base token, that is a, rising tide lifts all boats, very good for the ecosystem, healthy. But I think saying that, like looking at how to like capture value is probably the wrong thing to be optimizing for right now. Like I, I think Solana had it pretty close to right in that they haven't really spent a lot of time thinking about value capture, and the general sort of thesis of, hey, if we just are, the best place to launch apps and we get lots and lots of adoption, like we're going to be super valuable. And Solana has been, right? Like I don't know what the exact market cap is now, but it's also been, for the past two cycles, probably the largest growth story. Growth and then growth again. But to me, I think we're just not at the stage right now where like you have to have like some huge value capture story figured out. And frankly, I think the more you try to like use value capture to push the token price up is probably impedes adoption. So I know it's an annoying, like, keep like pushing back on this, but like I just I really can't think of apps. Maybe I think there's a value capture story that they need to figure out like relatively soon, but I don't know, L1s, it feels like no one was looking at Facebook in the early days and saying like, oh man, they're the growth rates are through the roof, but like they don't have a value capture story here, so I don't think this is that valuable. Like that wasn't the case at all. I think people like can see where the puck is going, and if you do get that a huge amount of adoption, how many ways you have tons of ways to monetize. um
Mm-hmm.
Now there's a separate conversation around like, if you were starting an L1 today and thinking about monetization, would it all necessarily be baked into this like token and super programmatic forms of value capture, right? Versus more traditional forms of value capture, like value added services on the side that don't necessarily accrue to the token, or maybe maybe they can, maybe they don't. Like, should first party services, like what if Ethereum itself had its own, like ran ENS, right? Like things like that, just equivalent of like utilities in an app, in like an iPhone when you get it, right? I think those are more interesting because and because no one's really tried them in the context of an L1, and they are not directly competitive with, in terms of like pulling value capture away from dApps,
Yeah.
to the L1 token. It's more complementary. It's like, oh, these are services that people want. dApps can leverage them, right, in their own workflows. Like you'll use the ENS, and so if you buy an ENS, that revenue flows back to like L1 somehow, right? So there's a huge unexplored territory of value capture methods that are not like totally programmatic and baked into the usage of the blockchain, like every single time you click a transaction, right? That should be explored, I think, as well.
So I want to spend a lot of time talking about that actually, because you have some really interesting ideas there. But I want to go back to this Facebook analogy, and all right, here are two things that I would just like leave you with. At some, I guess it would be interesting to think about when, at what point would you start to think about value capture, and when do you want to provide investors with a line of sight to value capture? Because in the beginning of Facebook, yeah, no one was asking about that. 10 years in, you bet people were asking about that. 15 years, you were expected to start delivering, right? And maybe it's different with Ethereum, it's different with Bitcoin. These things aren't companies, but I think the reason why that's a little bit different again, at some point in the asset organization, whatever's life cycle, you do have to start asking that question. And so I think it's just, yeah, that's what,
Yeah,
and the
I
other,
think that's the right questions to be asking, I think.
yeah. I mean, and then there is a question about, I think one of the things that makes this challenging is that there isn't some, I think basically that's what it is. You need like the line of sight, and that's what people are missing, I think, at the current moment. And I don't know, like even the comparison between Ethereum and Solana here, there's a little bit of a path dependence thing. And this is where I think people talk past each other on the modular versus monolithic, the original semantic debate that launched all semantic debates. It's like, okay, I the modular view of the world says eventually we're moving all of this activity on chain and it makes no sense to go on one layer, which I'm super sympathetic to on a long-term time horizon. But then, we don't actually I still like this line Anatoly said, like really sat with me. Like, I beg that all of my competitors build for a world of 1 trillion transactions a day. And he's probably right. Like, you can overbuild. And it's very abstract in the concept of block space, whatever. Think about it within the context of CapEx, like a factory, right? The what you have, if you have a very asset heavy business, what you're really optimizing for is your fixed asset utilization, right? So if I have a factory that's capable of producing X, I want it to be operating at 90 or so percent of X. By the way, this is another concept that Sunny has brought up within the context of EIP 1559. Like, you should be targeting a utilization ratio that's pretty close. And I think one of the ways that you could interpret some of the challenges that Ethereum, the network, is having right now is that they tried to skip to the end. I think they correctly intuited that everything is going to go modular on a long enough time horizon, but then you essentially way overbuilt for demand, and now there needs to be some period of consolidation.
Yeah,
So
and I think there's also a question of like, should you really specialize, right?
yeah,
And what Solana is like specializing for, optimizing for. What Celestia is, right, optimizing for. Ethereum, I think, is slightly a product of it just being, didn't like have all this fleshed out at the time of launch, right? It's kind of in the middle. And so the L1's not the best to build, dApps on, unless you want like super. I still think there's maybe a story for ETH L1 doing like low amounts of super high value sensitive like transfers long term. But it's also maybe not the best place to build like, app chains and, dedicated rollups right now, just because it
yeah.
had to kind of build that part of the plane in the air, and it's not, it's never going to be perfect, right? And so like that is I think a big challenge. It's just the awkwardness, right?
And I think it really does end up being what is the ultimate story for L1s? Like, how are investors going to bucket this? And are they going to value these L1s as this kind of like, you know, money like thing that you're buying this is the Bitcoin story, right? It's essentially a meme coin. There are no cash flows associated with it. It's very commodity like. You're buying it to hedge debasement, and the supply is the story. But these other, I've always flip flop between this, but in some senses, Bitcoin looks very like Ethereum and Solana. In other senses, it looks very different. One of the big differences is that there are cash streams that are, and both of these tokens have been positioned essentially as utility tokens that give you some sort of index on the cash flows that are generated in their economy. And if investors look at it like that, I think that the value capture story is going to be more important. If they're less discerning and they view all of this stuff as just a basket of non-sovereign commodities, I don't want to think too hard, and I'm going to bet 50% Bitcoin, 20% Ethereum, 10% Solana, whatever it is, then this value capture story doesn't matter. But on some time horizon, I think eventually it will probably matter.
Yeah, totally. I mean, unless I would say Bitcoin's an exception there, like a little, like maybe a little bit less so now that we actually are seeing like, L2s on Bitcoin, and they're adding, the ability to verify things. Like, you can do a little bit more, but I think the, digital gold, like the asset story, like that, it's kind of like an app chain for that. It's specializing in that, and that's why it's done totally great, because that has like its own distinct story that's not totally usage and growth based, right?
Yeah.
Like
Right.
like the money part of it, like the medium of exchange part of it didn't even work out, and like but the gold part of it still, strong enough to keep it going. And um it's more like they're optimizing for like adoption of people holding this thing, right, rather than adoption of people using this platform. I did really like the analogy, I forget we looked at a while ago. Is like thinking about these things as like megawatts, right, is like a great sort of like commodity analogy for L1s long term, when it's really really kind of beneath the surface of anything that touches the actual user. But we constantly hear like the money story as well, which, like, I guess my lukewarm take is that the money story is often used as kind of like a crutch, right, when you
Mhm.
don't have sort of a clear value capture or like large growth adoption story. And you just kind of say, well, it's the money, it will be the money in the internet, right, it'll be the modular
Mhm.
money. Don't worry about the value capture thing for now. um, but I think there's probably I more subscribe to that. But I think the what you're optimizing for between like adoption and value capture, it's kind of should change over time. At what point do you need sort of some level of line of sight into value capture? I think that's a really good question to ask. I think Solana is probably at the stage right now where they're like, they don't need to implement anything. I think they continue optimizing for growth, but it's unclear to me whether long term there's a way for like, you know, are the soul token holders going to accrue value in some form of like burn or something like that, or is it all just going to be, going to stakers forever? That's okay too. Yeah, I think you just but that should not be like the most important pressing issue for them to figure out right now, right? I think if I were them, I'd be looking at, okay, the Ethereum roadmap sort of did not satisfy like the level of network effects that you retain when you move to a network extension, right? How do
Mhm.
we ensure that they do, if it's inevitable that there will be L2s on Solana?
So that's what I was going to just conclude with here. And then I want to get into almost like a hypothetical experiment. If you were spinning up a new L1 today, how might you think about attacking this question, or an L2 as well? But I do think that, this has been framed as like an ETH versus Solana thing. And I don't really view it like that. I think that this is coming for both of them.
Yeah.
And I think that I've expressed this to you over time. Like I view these L1s as more commodity. Like I really struggle on a very long term time horizon to even, the development of multiple concurrent proposers. You know, that's not that is bullish in the sense that I think what it ends up doing is rerouting a lot of the MEV back to users, but it reroutes that MEV away from the chain, right? And it lowers the yield that stakers are getting paid, and in theory, the attractiveness of the asset. So that is one microcosm of a story that's happening across all of the revenue streams for L1s. But I think that, again, if you're starting from scratch, there are some very interesting things that you could do. I want to posit this as a theory to you, and get your reaction to it. Um, a lot of the inherent business models that I've seen, especially L2s deploy, are charging for interoperability. They view interop as the killer feature. And when I look at the OP stack or Arbitrum or something like that, it's like, hey, you could build this L2, or you could build it within our network of a whole bunch of other applications. You're going to be interoperable with one another in theory in some point in the future. And for that, we're going to charge you because there is an assumption that we think interoperability is valuable and applications will pay for it. Do you agree with that? That there's an inherent, positioning as interop as the key feature that protocols are going to use to extract value? And do you think that that is a viable strategy?
Yeah, it's a good question. I think the the L1, the services, or any sort of like platform, I would actually anchor it more to L1s, and then I guess L2s only within the context of it being sort of like a similar to an L1, right? And that you're going to have like a bunch of L3s or a bunch of like horizontal scaling, right?
Gotcha. Yep.
And yeah, I totally agree that I think security and interoperability within the same like trust assumptions, those are like the strongest network effects that that any sort of L1 or like an L2 ecosystem can provide. Um, and the question is what you charge, right? Is it more valuable to the developer? Like, does the developer accrue more value or get more value, right, by opting in than like what they pay, right? What they give up.
Mm.
And that's the bet that I think like these L2s are taking. But I really do think that that is something that should be provided by the L1 itself. Like if I'm building an L1 today, like I basically want to give developers everything they want while letting them retain as much to the max extent possible what you get when everything is within one shared state, right?
Yeah.
Because when things are within one shared state, developers don't need to think about interop. That comes right naturally. Like there's no bridges within the same state, right? They don't need to think about security, but they do need to think about like oh shit, like there are lots of constraints around what I can build here because I'm kind of conforming into the rules of this platform. There's only so much control I have over like maybe the final ordering of transactions, and there's only so much then so it points to like, okay, maybe they want more, right? But you want to basically let them have their cake and eat it too. And that's the way like we're seeing like a convergence of architectures across Solana, Ethereum, Celestia in general. And I do think that's the kind of like the role of the L1 long term is to provide um, you know security and strong enough network effects that it keeps the developers wanting, they get more value by staying on the platform, right? You take enough pain off of their plate and give them enough like benefits, right?
Mm.
That even if incentives point to maybe you can capture all of the value, right? No, you're not paying rent to anybody as like an independent L1, the incentives still point to wanting to stay on the platform. So yeah, I mean, I think that's, if you were to make an argument why like L2s are somewhat parasitic to the L1 or like at odds with the L1, it's because the L2s are now doing, in my opinion, like the job of the L1 and creating their own mini little L1 ecosystems like on top of Ethereum. And I think that's the shortcoming of like the current state of the rollup centric roadmap, where they're saying like, no, you need to be like a based rollup, right? Then you can get like even stronger sort of like interop with other based rollups because you are like aware of L1 state, or like you can you see what I'm saying, right? It versus, and that doesn't necessarily sound like what these folks want to do at all. And so yeah, if I were to like rebuild from scratch, I think that would be like the first thing I'd be thinking about is how do we basically break these trade-offs that I think are too strong on Solana and too strong on Ethereum, in from other like opposite ends of the spectrum.
Okay, so yeah, I've got questions. I've got actually a hypothetical question for you, which is, it seems to me actually that one of the advantages of the more decentralized you are as an organization, the more community you seem to be able to build. And they're probably like, here, I'll give you examples. And these are probably not like perfectly, but the biggest, the L1s are the ones that are able to actively garner the largest like religions behind them for the most part, right? Like they have these huge stories, massive communities. Like Ethereum and Bitcoin have multiple conferences independently organized all over the world globally. There are tens or hundreds of thousands of people that like deeply care. And then there's a big drop off between for L2s. And you think about it, it's like, why not? That doesn't necessarily have to be the case. What is the reason for that? And even within L2s, I think there's a big, like I will say one of the I think L2s that really leaned hardest into, in a really real way, very decentralized governance is Arbitrum. And look, there are some drawbacks to that for sure, but what they get is, I think they have the most active L2 community, largest, most active L2 community by far. And so I want to get a sense from you, how important you think that is for like a new L1 or one of these sorts of computing environments, because in a sense, that's kind of your top of funnel. That's really good for, recruiting new developers and mind share and users and all that type of thing. Why does this difference have to exist in between an L1 or an L2, or why have these L1s been able to, you know, garner much larger sort of followings?
It's a good question. I think like what we're talking about is whether you're an L1 or an L2, you want to like put forward a set of values, right? That
Yeah.
you care about, right? And then the architecture and the development that you're doing sort of like reflects those values, right? And
Yeah.
the value prop that you offer to developers should be centered around like those values. And then your ability to capture developers is based off of like how well those values resonate with them, right, at any given moment in time. And good, example is, okay, Ethereum at the very beginning, like the values were around decentralization, censorship resistance, et cetera, et cetera. This is reflected in, say, like the importance of home stakers. And it drew, a lot of like the Uniswaps of the world, right? Because they resonated with those values. At a certain point, I'd say like strayed too far towards like, at odds with performance and like great UX and things like that, right? But with Solana, the values were about performance and, a NASDAQ on chain, like, hey, we're not going to assume everybody in the world is going to be running a validator, right? We're not going to optimize for that. We're going to optimize for, we're going to kind of like counterposition against Ethereum with like all these things that they can't do and you can only do on Solana, right? And that was really, successful and appealed really well to a different sort of class of developers, or a different DNA, right, of developers.
Mhm.
And they've I think probably have done the best at this point of like continuing to have their roadmap and their marketing align with with those values, and like building a phone, right? Like that to make it easier and better to like interact with these applications that they've recruited. And then if you look at like the L2s, I mean, in general, like you're going after a subsection of the L1 community, right? It's
Mm.
not like an Ethereum L2 is realistically going to like, maybe, eclipses what they're trying to do, but like try to capture like multiple, communities, right? But it's the same
Yeah.
playbook. It's the same playbook where you have like, a set of values. Like Optimism was strategic in tying their set of values as closely as possible to Ethereum set of values, so that when you think of Ethereum scaling, you think of Optimism, right? And they did I think like they made a very conscious effort of that throughout like their marketing and their messaging. And Arbitrum, I think was took a slightly different angle, especially if you, I think there's a lot of overlap, but they also were like a little bit less like, hey, we don't want just like the big blue chip apps from Ethereum to come on to Arbitrum. We want like net new developers. Like, remember, even originally there was a whitelist on Optimism
Yeah.
and no whitelist on Arbitrum. And so I think like they've probably been more successful in developing like a really net new sort of community. Whereas like Optimism's been like, if you want, if you are like an ETH all the way, like, and you want like just ETH but up here, like
Right.
come over to us. And they got base. It's great. I'll pause there, but that's what I think.
I think that was really well said, and I think that resonates with, yeah, it's like they're trying to capture a small subset of a larger community. In theory, there's no reason why, given enough time, and if most people end up having their relationship with an Arbitrum or an Optimism, that community couldn't get bigger than the underlying community. But I see that the other part about inheriting the values of Ethereum, the base layer, is very interesting. I totally agree. One of the, I guess, funny challenges, even if you think about mega ETH, right? In a sense, if Ethereum starts with its set of values and then has its architecture reflect that, the architecture of the L2s should actually be the opposite of Ethereum, because it should be a trade-off, right? And that's what mega ETH
It's
really
like, we
means.
did this so that you guys can do that,
Do
right?
this,
Yeah.
right? Yeah, they should fit together like puzzle pieces, and so maybe they shouldn't be one-to-one copies, actually. And so I guess from a cultural standpoint, then that's kind of bullish mega ETH. That's an interesting way to think about it.
Yeah.
Okay, here's another. I'm just asking a lot of just high level questions for you here. How do you think about the role of infrastructure within, an L1 and bootstrapping community and all that type of thing? And then I want to dovetail that with something you brought up about 30 minutes ago, which was native applications like L1 hosted infrastructure services like an ENS, or like if a Conduit or something like that was owned by one of an L1 foundation or something like that. And the pros and cons that I see it is, we've talked on this program a little bit before. It's interesting to watch the difference look at the difference in ecosystems between Solana and Ethereum. And I think it was Lucas Bruder of Jito who initially referenced this within the context of liquid staking tokens. And he said something to the effect of, it's like the worse the UX on Ethereum was, the more the more bullish it was for adoption of liquid staking. And I think he's right. And in a lot of senses, like Solana just had kind of this native staking, right? And so liquid staking didn't need to take off. There wasn't as great of a UX gap. And I think you can see that in a lot of different places actually on Ethereum. They were very minimalist and they pushed a lot of complexity to the edges. And so all of these hardware or infrastructure providers just cropped up. And that's where most of the wins in terms of big companies on Ethereum have been built. Now, do you agree that leaving it to more third parties actually is good for kind of building community and VC investment and all that type of stuff? And then how do you characterize the downside of that, of, some of the infrastructure that Ethereum left for people to build ended up being really core, and now there are these thorny alignment issues, most notably with Lido and, maybe less so these days, but Eigenlayer.
Yeah, it's super interesting, like just discussion topic, because I think the lessons that we can draw from the most successful like early L1 Ethereum is almost at odds with the lessons we can draw from the most successful operating platforms in, traditional tech, right? Ethereum, like the sort of like, it's almost like people kind of accept this as a truth because of Ethereum. It is, if you are the base layer, the less you do, right, the less opinionated you are about what's happening on your platform, the more, sort of innovation and creation that can happen, right? If you're too prescriptive about what should happen, on your platform, then you will like miss all these crazy use cases that people come up with, right? You're like limiting the surface area or like potentially of innovation that can happen on your platform. And second, in like the inverse, like the more you do, from a base layer standpoint, like at higher levels of the stack, the more developers will feel like maybe turned off because it's almost like competition, right?
Yeah.
And this is, a lot of this, like those concerns were present when, Apple launched the iPhone and had its own apps, right? Like the iPhone didn't come with just like a blank screen, right? It had utility apps. It had, basic functionality, right? When you download Windows XP, you're, gonna get Microsoft Office, right? And I think that's where things are going. I think picking and choosing the right things to do is going to be, kind of where the devil is in the details. But I think there's a very good chance we look back in 10 years and think it's like kind of crazy that, L1s and L2s were not more opinionated, or did not provide, let's say, like complementary services that, bolstered adoption while capturing some value, right? In a way that they like, services that are largely complementary, right? Like if the iPhone didn't have a camera, and it relied, and you had like 7 different camera app or like, hardware like choices or something like that you could go to get like a camera installed on your iPhone, right? And then the apps had to figure out like which, camera hardware, like third party provider should I integrate. If I'm building Instagram and I have to like make sure Instagram is compatible with all the different choices that the user could have put the camera, could have gone with for the camera, like that's bad. That's bad. And I just don't think that time is on the side of of base layer or L2s today. Whereas like Ethereum had years to cultivate this community in a really unopinionated way, right? And I think Eigenlayer is probably going through the same thing right now, where like, it's all about permissionless innovation, et cetera, et cetera. But hey, like we also want to like realize that we could put out some services that like are going to help our people on the platform. We're going to put out a service that shows that the platform works, and EigenDA, right? And so, I think again, it's like I can make this argument and be wrong if I were to like back up the argument with the wrong examples, right? Like of things that you should build. But we're starting to see more experimentation with this, and I think that's a good thing. Like, Anisha is a basically like it's a Cosmos chain that serves as a settlement layer for a rollup ecosystem, um, and they have an AMM right on that chain where like if you want to do basic swaps, that's already there. Um, whether like that's the right thing to do, or whether it's if you're a roll up framework also launching like a RAS provider out of the labs or like the devco team, right? I think that's the question, is like what are picking the things to build yourselves that are worth it based off of like the resources that you'll have to divert to that versus other things. Like is it worth it because it bolstered adoption to the point that it was positive ROI? And did you, basically by building this, like, did more apps join the network, or did apps not join the network because you built it because it felt competitive, right?
Yeah.
Or if they had the fear that you were going to like, basically build out any sort of app that ended up being successful, you just build it yourself.
Hmm.
But in general, I totally see like more opinionation being like probably the right move at this point. Because I don't think the Ethereum playbook of just letting the market take care of everything is going to work. And again, going back to Solana and the phone, like that's a really interesting example.
Yeah. Yeah.
It's a big old swing. Probably too big of a swing, but that's the idea, I think.
Yeah, and the OG example of being opinionated on this lens or on this axis is like what is private sector versus public sector, right? What are government provided services versus, what do we let the private sector take care of? And different countries and governments have very different philosophies on how they should work. In general, there are some commonalities. Education tends to be largely, public sector, and
Yeah, totally.
utilities are sort of nationalized, and there are there's sorts of commonalities, and I feel like we're probably moving into some sort of era there where maybe an opportunity for some of these new up and coming L1s or L2s can be actually to be opinionated about this stuff, and say, hey, I've learned the lesson that liquid staking is very close to the metal in terms of how the protocol wants, and that needs to be tighter at the hip even than we had originally thought, or things like that.
Yeah, that's an interesting one. It's like, oh, if you create a system that and facilitate like makes it is ripe for like a big liquid staking provider to come forward and like kind of capture the network, that's not a good thing. But like launching your own native LST might not be the answer. Maybe it's creating maybe that has second order consequences that you don't like either. Maybe the answer is like creating a system that doesn't, or none of that actually ends up happening.
Mhm.
So yeah, I totally agree.
Yeah.
Stuff that's super close to the metal, stuff that's you know complementary shared services, like that should be what L1s are thinking about. Stuff where like if there was a huge market of third party providers, like there was fragmented, maybe that's actually net worse for the whole
Mhm.
ecosystem. You know what I mean? Like
Yeah.
I don't think it's awesome that there's like 5 different sort of standards being proposed for interop between rollups, and no one really knows which one's good or bad. And that's a great example of like, well, the L1 should have done this. But there's also like more, even more involved things that an L1 could do product wise, like an AMM, right? So yeah, lots more to come there.
All right, I know we got to wrap here in like 5 minutes, but let me put it to you here. When we're looking out on a 5-year time horizon, do you think, are you a believer? Let's stack rank these 3 things. Let's stack rank the app layer, like L2s and kind of middleware in general, and then L1s. Where do you see, if you had to place your bets, putting your VC cap on here, which of those layers, how would you think about allocating into those?
So app L2, L1. I think we're still in like a very much like a growth story mode. And if it's like new L1s, I think if there is a big amount of like, you could see a lot of growth and momentum, like those are still going to be the highest market cap, outcomes. Even if they run into value capture problems later. So I wouldn't fade L1s by any means. And then, I think the sort of application side is obviously it really depends on the regulation stuff. Like if they're allowed to have tokens, if those tokens are allowed to be like equities basically, but yeah, that's where I'd be betting. And I think that, L2s are probably not where I would be betting, because I think L2s, any of them that are trying, like the best way for an L2 to capture value, just like an L1, is to keep everything within a shared state, right? And we know that at a certain point, especially for L2s that have like low sort of security, that's not going to fly. Like people are going to want to leave and start their own L2s, L3s, et cetera. And then they're left in this place of like charging for these, like, for like interop, right? Or like business licenses. And I just think that, the market's not ever going to give them the leeway that the market gives L1s sometimes there. Right.
Yeah.
And the market wants to see apps like that are capturing lots of value and succeeding. So my bet would be on the L1 or the app side.
All right, buddy. This was a good one.
A lot of ground covered. Yeah.
A lot of ground. Yeah. A lot of ground. So
hopefully it sounded cohesive and somewhat the logic was somewhat, tied together. But
I think there was plenty of logic. My hope is that going into the fall, first of all, I'm assuming you are as well, but big fall guy. I'm very happy that it's no longer like 90 degrees and humid here. It's very New England of the two.
It is.
But what I would also hope is just slightly better vibes on CT. Crypto Twitter has been not great in terms of, it does, you said it feels very like bear market sentiment.
But no, I think the bear market was better in a lot of ways, because we were all just like, well, yeah, things suck right now. And it's in this like, you have the trough of disillusionment, they were definitely in that. While at the same time of not like, kind of like knowing if we're in a bear market or not. Because when you're in the bear market, you can always be like, well, it's going to end eventually. And now we're just kind of like in no man's land. Like, can we be back? Like, we're not back. Really. Yeah. But anyways, let's keep the vibes up. We'll go apple picking or something.
Good vibes only. Good vibes only. Yeah. All right, buddy. This was a fun one. You can end it here.
All right. See ya.
Hey, everyone. Hope you all enjoyed today's episode. Want to give a final shout out to Namada. Again, a team that is near and dear to my heart. They are building the Shielded Asset Hub, which is protecting the future multi-chain. Talked a little bit about how that works in the mid-roll, but for now, what I would highly recommend that you do is go check them out. They're in their mainnet launch phase. You can follow along with everything at namada.net. You can start rewarding yourself by shielding your actions and strengthening data privacy for all across the multi-chain. So thanks again, Namada, for all the great work that you're doing.